Cost Accounting, Chapter 6. Chapter 6, we cover process costing. So process costing is the other main costing system in addition to job costing that we use in cost accounting. In process costing, we have processes or departments. The process costing is used when we have repetitive processes that manufacture very similar products. Unlike job costing, which is used for unique or individualized products, services, or customers, process costing then applies to the entire process. So when we're using process costing, we prepare a production cost report. These are prepared each period, usually each month, for each department in our process. Each individual department or process has its own work in process inventory account, and the production cost report has the number of units in process, the cost incurred during the period, the cost per unit for each cost element, direct materials, direct labor, and overhead, and the costs assigned to completed and ending inventory units. There are two different methods for a production cost report, the FIFO method and the weighted average method. The main thing that we're concerned about in process costing is the equivalent units. So this is the amount that we worked on during the period. It's a term used exclusively in process costing to talk about what work was completed during the period. So if at the end of the month we have, in this example, 2 units that are 50% complete, they are equivalent to 1 fully complete unit. It's an expression of partially completed units shown as the number of fully completed units their complete percentage of completion would allow for. We then apply the cost for that period to the equivalent number of units produced during that period. When we're looking at process costing, we usually have very small amounts of direct labor. Most process costing is heavily reliant on machine labor, so we combine factory overhead and direct labor costs into a cost element called conversion costs. So this terminology goes back to what are the prime costs and what are conversion costs. Direct labor and manufacturing overhead are the cost for converting raw materials to products. Instead of applying overhead based on an overhead rate, like we do in job costing, in process costing, we take our total overhead and direct labor costs, put it in a pool called conversion costs, and divide that by the equivalent units produced. Direct materials are costs that are added at specific times during production. When we're looking at the flow of costs and process costing, in this example, we have 2 departments. So we have materials inventory, direct labor costs, and factory overhead. So we start by putting direct materials, direct labor, and overhead into Department A. When Department A is finished with their process, they send it on to Department B to go through the next step of the production process. Department B then gets those costs that are transferred in from Department A, and then they add on costs for processing goods in their department, direct materials, direct labor, and overhead. When Department B is finished with it, they transfer the finished product to finished goods. You will have as many departments or processes that is required for the manufacture of your product. In the production cost report, we have a 5-step process. The first thing that we do is we analyze the physical flow of production units. How many units did we have in process at the first of the month? How many units did we start and finish during the month? meaning we did 100% of the work on those products, and how many units are partially completed at the end of the month. We then use those numbers to calculate our equivalent units for each manufacturing cost element, and we will use either the FIFO or the weighted average method. We'll be learning both methods in this chapter. We then determine the total cost for each manufacturing cost element and use that to compute our cost per equivalent unit. We assign total manufacturing costs to units completed and the ending work in process inventory. In the weighted average method, we include all costs in calculating the cost per equivalent unit for each cost element, the unit cost. Thus, the prior period costs and the current period costs are averaged together. In the FIFO method, only costs incurred during the current period are looked at. So thus, FIFO's costs represent the current period's cost per equivalent unit for each manufacturing cost element. We're going to look at this process costing example. We have a toy company with two production departments, molding and finishing. Molding places direct materials into production at the beginning of the process, and direct labor and factory overhead costs are incurred gradually throughout the process. The costs and unit production information for the molding department are used in the following example. This company uses the weighted average method. So in this example, we have various information about the molding department. We have information about our beginning work in process inventory, how many units were partially complete at the beginning of the month, the number of units we started in addition, so 40,000 units were started in the month in addition to the 10,000 partial units. Of the total 50,000 units we were working on, 44,000 of them were finished and transferred out to the next department. At the end of the month, we had 6,000 units still in process, and the costs we added during the month are here: direct materials, direct labor, and factory overhead. So we would use all of this information to make our production report. Step one is to account for that physical flow. So we had work in process inventory on June 1st. We added into production 40,000 units. So total units to account for are 50,000 units. We completed 40,000 units and transferred them out. We had 6,000 units left over in work in process inventory. That gave us 50,000 total units. Step two is to calculate the equivalent units using the weighted average method. So we had 10,000 units in process at the beginning of the month. Their completion was 100% for direct materials, 30% for direct labor, and 40% for factory overhead. The units we completed were 44,000. We did 100% of that work. We had 6,000 left in process at the end of the month. They were 100% complete for direct materials, 50% complete for labor, and 60% for factory overhead. This gives us total equivalent units for direct materials of 50,000, direct labor 47,000, and factory overhead 47,600. The next process is to determine the total cost for each cost element. So in the weighted average method, we add those costs together. We have our work in process costs plus the cost that we added during the month of June, giving us total cost to account for of $122,720. We then allocate those costs. We calculate what the equivalent unit of production cost is per unit, and then allocate those costs to the work that was transferred out and the work that we still have in process. So we divide each amount of the cost by the total equivalent units. giving us a total per unit cost of $2.53 for the units that were processed during the month of June. Our next step is to assign that $2.53 of work to the 44,000 that we transferred out. So we transferred those out to the next department, $111,320. Then we had ending work in process. We take the equivalent units of ending work in process times the amount that we calculated for each item. So for direct materials, $1.08, for direct labor, 50 cents, and for factory overhead, 95 cents. We take the amount of equivalent units we calculated for our ending work in process inventory times those cost units, and that gives us a cost of $11,400. So that department at the end of June shows an ending work in process inventory of $11,400 and transferred out costs of $111,320.